US trade policy shifts are sending shockwaves right through the stock market. After a brief rally, stocks plunged on Thursday as fears of recession mount. Investors are increasingly anxious about unpredictable tariff changes, particularly affecting tech shares, which fell sharply. President Trump has announced a delay on certain tariffs with Mexico, but uncertainty remains as tensions with Canada now escalate. Meanwhile, overseas markets are seeing mixed results, with the European Central Bank cutting interest rates amid growing concerns over tariffs. For more, let's head now to Sydney to Steve Gopalan from Scanter FX. Great to see you. Talk to us about why the US stocks fell on Thursday. Is it all because of tariffs?
Good morning, Aaron. Thanks for having me. Yeah, it's quite interesting. I mean, the last few days, obviously, we've seen a massive change in Trump's dialogue with regards to tariffs. Markets are getting increasingly nervous. You know, it's come to a point where it seems that today there will be a tariff announcement and tomorrow there could be a delay. We're seeing shockwaves across the sector. You can understand why traders are pretty much profit taking at this stage, and looks like it's going to be a more equity unwind. That's what we're seeing. And across the board, we've also seen other stocks, especially in the Max 7, the chip makers, they're all taking a bit of a hit as well because there's a lot of uncertainty brewing.
Now, talk to us about the NASDAQ as well. How is it performing at the moment in the market downturn? Because we see that it's been hit quite hard.
Well, Nasdaq is also considered to be a risk proxy as well, simply because it's got these, these stocks that are part of it, where when there's animal spirits in the markets, people tend to buy in the stocks, and we're seeing a lot of decline in them simply because investors are quite scared and spooked. They're worried that there might not be enough, expenditure coming from these companies because they're not sure if they could get all the, raw parts or these stocks to make sure these chips are going to be made in time. So stocks like Nvidia, all the AI stocks, they're all taking a bit of a hit at this stage because of that. And naturally, it's bringing the whole tech sector down.
Very much so. Talk to us about global markets outside of the US. How are they reacting to the tariff news?
We see most corporates are still borrowing money. However, in saying that, what's happening is that investors are, once again, they're worried. They're not sure how tariffs are going to impact. Is it going to be a reason where consumers are just going to stop spending? That's going to be critical. We've seen that yesterday's US trade report showed a massive surplus, showing that people are probably buying before more and more tariffs come into picture. We still are yet to see what China's retaliation is going to look like. We've seen Canada come out there, they've put some tariffs back on US. Overall, we're worried that, trade could actually come to a lock. There won't be much trade happening if Trump comes out and starts whacking more tariffs on China or into Canada as well. Because right now, as it stands, China's going to be looking at almost 35% worth of tariffs. Canada's got almost 25, except the energy inputs. They're not going to get tariff. But overall, the problem we have is with him announcing tariffs and his Treasury Secretary Besson not able to back it up, it's sending confusing mixed signals to the markets. So markets are getting confused because we're hearing one from Trump, then another word from his administration.
Talk to us about the ECB. They've cut rates again now for a sixth time. Many say that the problems that the ECB is facing are outside of its control.
100%. I mean, now they've put their hands into supporting Ukraine. I'm not sure if they wanted to do it, but it looks like they were forced into it, right? So they're going to be cutting rates. We got 2 more rate cuts priced in from the ECB. This rate cut was probably more of an announcement to improve the economy. But once again, that economy is slowing down as well. They've unlocked close to $500 billion worth of investment for defense spending, which we're going to get announced on March 13th. So ECB is, they're going to have to manage this boat very carefully. They can't rock it up too much because, end of the day, we do know that there's only 2 or 3 countries in the whole European Union that pays for the entire bloc. So it's going to be too much pressure on Germany, France, and Italy. You know what I mean? So if the war continues, if they start pledging more money into supporting the war, where are they going to get the financial backup? So that's a question they probably be worried as well.
It's interesting you talk about Germany there, because Germany for a very long time has essentially been trying to convince the rest of Europe, don't spend any money, particularly after what happened to Greece over the past decade, right? Now Germany essentially is doing the reverse, saying we need to be spending more money on military defence. France coming along as well. We have heard from Emmanuel Macron during the week really warning European leaders about the threat that Russia now poses as well. What does it do for the European economy when all of these EU nations suddenly do an about turn on military spending? Will that have an impact on inflation? What do you see as occurring? And I guess for investors as well looking towards the EU?
Good question. I mean, obviously, if that scenario does come into play, we are going to see the euro get sold. Unfortunately, there won't be much investor confidence left in it. Right now, we're seeing a lot of investor confidence heading back into the euro. They see that the government's spending money, and it looks like it's promising and, giving confidence to markets as well. But in saying that, it's a very interesting question. What happens if these countries make a U-turn? They don't say, we no longer want to support this. It's going to be challenging. But in saying that, the European Union, even today, they still buy Russian gas. They still buy Russian, they need gas, and they're buying, and again, they've been pushed by Trump, or they're pushed by US trade tariff threats. That's why they're going towards Russia to buy this gas. So they're still buying from Russia. So I still see them still being a customer of Russia, so they're not going to step away from Russia or anything. Probably they might take a more diplomatic approach to things. But once again, getting these tariff threats from Trump is not helping the situation either.
There's a lot in there, right? And I'm going to ask you this question, not a political question, but it will sound that way. On the one hand, you have the President of the United States, who seems to be doing anything he can to bring both Zelensky and also Putin to the negotiating table. Putin runs a country where he has a lot of people very concerned because of Russia's history of being invaded. You now have Europe at the same time that Trump is trying to soften the blow and bring everybody back together and end the Ukraine war and end Russia's aggression. Europe is now planning massive spending on defence, primarily targeted at Russia. Is this going to make Donald Trump's problems harder? And the reason I ask that and say this isn't a political question is because investors are coming along for the ride. And it seems like anyone who hoped that the war would be over in one day and we'd be back to stable waters, this feels anything but.
It's a loaded question, Aaron. I'm a currency strategist, not a political strategist, but I'll answer this in my best way the way I look at things. Right now, it looks like the motivation for Donald Trump to end this war with Ukraine and Russia, obviously it looks like there's a minerals deal that's standing behind this, all right? However, in saying that, we haven't heard much from Putin as well, besides the fact that he's using Donald Trump as the front end to convey his message. We need to understand what does Ukraine look like once this negotiation comes into play. Are they going to be part of NATO? Are they going to be part of Russia? Are they going to be an independent country? So there's so many things that's coming into the mix, right? Then you've got investors and financial market participants who are simply trying to see if there's an opportunity to actually take participation and make money in this market too. So and hence the reason it's a loaded question. We would not know what it looks like right now. What it means is that everyone's motivation behind this, right? What's Trump's motivation? Because he started all these tariffs with I thought he started the tariffs with attack on fentanyl imports, right? He wanted to curb fentanyl imports. That's why he was doing this. And then all of a sudden now it's become a geopolitical messiah situation. Now it's become more of a, it's a tit for tat. And he's not enjoying anyone who challenges him. So, and also one more thing, this is an article I was reading the other day. Now with, let's say, Trump not supporting Ukraine, right? US is not supporting Ukraine. What message does this send to the rest of the world? I mean, people in Taiwan are going to look like, is he going to, because US has been supporting, now all of a sudden, are they going to just back out of supporting Taiwan? So there's a lot of uncertainty brewing behind the scenes that no one's talking about, simply because, if we start looking out under the rock, there's so much dirt there, no one wants to go underneath it. So country, and then imagine that semiconductor industry massively relies on Taiwan, and everyone knows that. Imagine if something where US does to upset Taiwan, and imagine if they stop selling into the semiconductor industry, all of a sudden those Max 7 stocks that have been holding up until now, they're just going to have a massive correction as well. So I think investors are spooked. They're just not sure which direction to play. And hence the reason we're seeing in currency markets, we're seeing a lot of customers buying into optionality. They're buying protection just because they know that anything can happen at any moment in time.
Let's just finally talk about the ASX recording lowest close of the year this week. What recent economic data suggests that Australia's economy is improving? How do you think it will help investors have some confidence in Australia and also the Aussie dollar?
I mean, with the Aussie dollar and the Australian economy, obviously, up until now, we did our best to bash the RBA. Everyone did and managed to get a rate cut from Michelle Bullock, though reluctantly. I don't think she was quite happy with the rate cut. So financial markets have taken that as a positive sign. We've seen highs. Naturally, we are a reflection of what happens globally. And we're seeing companies, all the mineral sector taking a bit of hit. We've heard from China as well. They're going to slow down on steel production. There's going to be the demand for steel is going to come off, so that's probably going to hit our, the minerals ASX listed stocks. Overall, I think ASX is probably going to see some more correction naturally, because whatever happens in the US and globally, we will see a result of that. For the dollar itself, Aussie dollar is trading at 63.35 as we speak today. There's a couple of things happening. We're waiting for jobs report today. If the jobs report comes in disappointing, we might see a pull in the Aussie. We might see touch 64, 64 and a half. But once again, all this hard work Jerome Powell and his company has done up until now, it looks like it's going to go down the water if Trump continues with tariffs, right? Because I don't think the US is going to be able to cut rates anymore. In fact, I'm not sure if you've started hearing rumors or stories that people are starting talking about is the US heading into recession. I know it's too early to call it, but still, that's a worrying sign as well. So those things will start playing into the markets. Once again, that's all the signs of risk off, which means that ASX naturally will be coming off further down as well.
Yeah, well, we think about the tough job that investors have. Imagine being the chair of the Fed Reserve or the governor of the Reserve Bank of Australia. Steve Gopalan, great to have you here on Ticker. Talk to you again soon.
Thank you.